Now, whether you're a more dividend and or income focused investor, I think it's safe to say that at this point, you've probably heard about JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, and or as of right now, probably already hold some shares of it in your portfolio. Now, this is because JEPQ offers a high quality strategy, one of my favorite actually being the cover call strategy, which allows investors to have some exposure to upside, but even when the market is trading down and or sideways, ETFs like JEPQ and others pay a large amount of yield as far as dividends to investors because of course that cover call overlay. Now, although I'm a huge fan of the JP Morgan Nasdaq Equity Premium Income ETF, JEPQ, and the fact that I currently hold quite a bit of it across my portfolios, there is another Nasdaq cover call style ETF that's relatively new that I think could possibly even be better than that of the GOAT, JEPQ. So if you want to dig into this Nasdaq 100 cover call style ETF that I think could be the JEPQ destroyer, make sure to stick around, drop a like down below, and let's get into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just to be fair and just to give everyone sort of an idea of what we're talking about here, to go over some of the basics of JEPQ so we can compare this to the other ETF, it says right here in the JEPQ overview, seeking consistent premium income with lower volatility, the JP Morgan Nasdaq Equity Premium Income ETF seeks to deliver monthly distributable income and Nasdaq 100 exposure, but with less volatility. Now, the expertise is his lead portfolio manager, Hamilton R., has over 3 decades of experience investing in equities and equity derivatives, and the portfolio, this is the important part, underlying equity portfolio employs a applied data science approach to fundamental research and portfolio construction, and with that a disciplined option overlay implements written out of the money Nasdaq 100 index call options that seek to generate distributable monthly income. And at least so far historically, JEPQ has returned quite a bit for investors year after year, even though it's only been around for a few years. It's moved up and to the right over time and also been paying investors like myself, like I said, anywhere from around 35 to 40 to even upwards of 55 cents on a monthly basis, which is pretty crazy considering this ETF costs around $53 per share. But even with all that, like I said, there is a new kid in town. I'm talking about the NEOS Nasdaq 100 High Income ETF, or ticker symbol QQQI, which has only been trading since January 30th of this year, so it's relatively new, although it's been trading long enough to where we can see a little bit of what's going on so far. Now, this ETF crossed over my radar because I already own some shares of SPYI, which is basically this ETF's brother or sister. The only difference is SPYI invests in the S&P 500. But because QQQI along with JEPQ both have Nasdaq 100 exposure, I think this ETF could potentially be better than that of JEPQ over the next 5 or so years. But let me explain. For one, this ETF also pays the monthly distribution just like JEPQ. The expense ratio is going to be more expensive for this one though. And that is something to consider, especially if two ETFs are going to be trading nearly the same over time. Expense ratios could add up, so that's one thing that JEPQ probably has over QQQI. Now, the distribution rate is massive for this one, around 15.16%. And keep in mind, it's only been trading for just under a year, but still the distributions have been massive so far. But now to get into the important aspects of this ETF and why I think this strategy might outperform the strategy that JEPQ follows. It says, number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the Nasdaq 100 index and implementing data-driven call option strategy. So just like that at JEPQ, basically the same-ish strategy so far. But number two, actively managed by NEOS. The fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing NDX index options classified as 1256 contracts, which are subject to lower 60/40 tax rates. So right there, this ETF is trying to make the distributable income much more tax efficient potentially, which is maybe more important to some investors than others, especially if you're in a position where taxes are an important aspect to your investing strategy, which I mean for most of us it is. This could potentially be something that this ETF offers over JEPQ, of course. But lastly, this is one of my other favorite aspects about these different NEOS cover call style ETFs. It says right here, number three, the fund utilizes a call option strategy that may include both sold and purchased NDX index options, which may provide the opportunity for upside capture in rising equity markets. Now, like I said, this is probably one of my favorite aspects about these NEOS ETFs, talking about QQQY and SPYI, because the fact that they might also purchase NDX index options, which could lead to upside capture, that's something that a lot of covered call style ETFs and strategies don't necessarily do. You see, a lot of times covered call style strategies, especially that we see in ETFs across the markets, they cap the upside. So if the underlying trades upwards, especially in a fast fashion, between then and the expiration date, the upside is basically going to be capped. And although this does protect the downside to a degree, there's not really going to be much upside with the covered call strategy, and that's okay because for the most part with the covered call strategy, you're more infatuated with yield anyway. But with purchasing NDX options, this could potentially offer some upside for investors, while still of course having a lot of exposure to the most typical covered call strategy that we all are aware of. Now, to compare JEPQ and QQQY just a bit more, on the max time frame, QQQY, at least since January of this year, is basically flat. It's up around 1% or so, so it hasn't really grown all that much. But on the other hand, JEPQ on the year-to-date time frame, this ETF is up over 7.5%, which has performed much better than QQQY, at least during that time frame, more or less. Now, in the max time frame, JEPQ isn't really up all that much either, though. It's up around 8.9%, and this is since back early-ish 2022, so it's not like on the max time frame that JEPQ has grown like crazy. It's not like it's up 20, 30, 40, 50%. Yes, it's paid a nice solid 7, 8, 9, 10% yield consistently, but neither or of these ETFs, at least in their given time frame, have really grown anything substantial. And of course, that's more or less fine because most investors, including myself, are buying shares of JEPQ to get monthly income, which, like I said earlier, it has done so. It's paid anywhere from 34, 35 to upwards of 50, 60 cents or more, depending on what's going on in the market in that time frame. Now, on the other hand, when it comes to QQQY, at least so far, the actively managed ETFs seem to try to give investors a pretty steady payout, which I like. A 60-cent more or less distribution is what's been paid to investors at least since inception, which I definitely like because, again, as a long-term dividend income-focused investor, it's nice to have an idea of what your portfolio is going to be paying you next month, and the month after that, and even the month after that. Now, there's going to be times where even these ETFs that have sort of a target payout are going to pay probably more or less, but again, just having an idea versus something like JEPQ, which pays anywhere from 56 cents one month and then a few months back 34 cents. So you just really never know what's going to happen. But again, it's all just within the nature of the fund. But the real numbers are what's most important, and since inception, if we were to compare JEPQ to QQQY, this is what things are looking like. Now, once again, keep in mind that we can only go back around 0.63 years because QQQY has only been trading for a little while, but still with a $10,000 investment and dividends reinvested along the way, QQQY would have returned around 10.36% as far as total return, or around 16.51% annualized gain, where JEPQ actually trails behind at around 10.12 and 16.14%. So making the better Nasdaq covered call style ETF, at least in this time frame, QQQY just by a smudge. Now, of course, you also have to take into consideration the expense ratio, but again, this is more or less just an estimate to show what we're working with. Now, even with dividends not being reinvested, it still is more the same. QQQY is almost up 10% as far as total return goes, and JEPQ is just a smidge behind it. So is the NEOS Nasdaq 100 High Income ETF QQQY the JEPQ killer, and is this ETF going to perform better long term? Obviously, only time will tell. I, of course, do not own a crystal ball. I have no idea what's going to happen in the future in the markets and or with these relatively newer ETFs. But I will say I'm a huge fan of this ETF strategy. I think the fact that it's offering exposure to the Nasdaq 100 with the covered call strategy, does it in a tax efficient manner, and of course also has a strategy to maybe even seek some upside. I think that's going to be great for income focused investors. But now lastly, most importantly, I want to hear from you guys down below. In the talks of JEPQ, comparing it to QQQY, which of these ETFs in the next 5 years is going to return a larger total return for investors? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.